Hello, how to file Form 1120S U.S. Corporation Tax Return for an S Corp for 2023. I'm just going to show how I will file this form using some numbers, but just keep in mind that it is not the only way to do it, and it is for educational purposes. I will suggest though that you use a tax software to file the return, but let's grab some paper document, some forms here to use as a draft to put numbers in it to see how that is going to look like. So Form 1120S for S Corp and L.L.C. tax as an S Corp. So part line A or box A, S election effective date. So you will put the date that you elected to file the S Corp, the date that your S Corp election started. And let's see if we have an example from last year we can put in the form. But I will suggest you pull your business document out so that you can find the election dates for your business, and you use that. So we have 2016 here. We are just going to put it back here. So, and for business activity code, let's go to the one we used in last year example and use that as well. We can just copy it. If you are using a tax software, it will just pull from last year. If you use that same tax software the previous year, it will just pull those information to the current year return for you. And that's one good reason to use the tax software. And another reason why you should use a tax software is if one number will be on multiple forms, it'll automatically put that number on different forms for you, saving you time. So now the business name, you make sure is the business legal name. So we are just going to put business legal name, and you'll find that on your EIN application form if you save a copy of it, or in the letter that they sent you after you apply for the EIN. You'll put your business street address, number, and city and state, and the zip code. Your business identification number, you will enter that as well, and the date that you file your LLC with your state, or the date you file your S Corp with your state, you will enter that as well. And we can use this as an example here now, and that is box E. So box F or line F, total assets. So how do you calculate the total assets of your S Corp business? Let's use an example. Let me go back to where we are. and we will need multiple documents for that as well. So to be able to file your tax return for your business, it is crucial you have your financial data on hand. If you have if you sell physical product, you have inventory, you'll have your inventory up to date. If you purchase assets for your business, like long-term asset for your business, it's good to have your depreciation well sorted out. You have your expenses organized, and it makes it easier to fund your numbers. And technically, there are some form that you might have to file in advance if you're using a paper document, but you are not going to use a paper document. But when you are filing the tax return with a tax software, they will let's just duplicate this one. They will as they ask you question, they will open the form that your answer will go on. So how do you calculate the total assets of your business, of your S-corp business, or how do you calculate the balance sheet for your business? Is also called Schedule L for Form 1120S for 2023. So if you start your business before 2023, then you already have previous year data that you should have in your balance sheet. If your business started in 2023, then the beginning of the tax year colon will be 0. And in this example, we copy the example from 2022 to 2023. And when we assume that the business in this example existed before 2023, that means it has asset and liability from before 2023. Therefore, you'll pull the previous year balance sheet and copy year-end data to the beginning. So it's going to be year-end data for 2022 to the beginning of the tax year 2023. So by doing that, so the first thing is the asset. So a balance sheet has a portion for assets and it has a portion for liability and equity. And in the asset section, you have the cash the business has. If you sell and then your client pay you later, you'll have account receivable as well. Otherwise, you may not have anything there. If you have physical product, then you will have inventory section to complete. And if you have assets you purchase for the business, like long-term assets for the business, then you'll have the depreciation section and possibly the amortization section to complete as well. And for the liability section, you might have an account payable. If you owe some money that you need to pay, you might have an account payable section, like something on the credit card that you didn't pay before the year ended, could be in the account payable section. And if your partners or yourself contributed to the business, you'll have capital stock section. That's where I like to put capital contribution to the business. And then the profit or loss will go on the retained earning. That's where I like to put that as well. So that is just the way I complete it for our business. So that's that strategy I'm going to use in this example. So now that we see the different area of the balance sheet that we might have to put information data, so we are going to copy the year and the previous year numbers to the beginning of the year. So you will just copy that, and if we go down, we will aim to have the total assets for the year end, previous year end, as the beginning of the 2023 year. So we will paste that. We have inventory number here that we will copy and paste, and we have those, and that is the depreciation. And for this one, I will just copy the number that I added in, and when I'm adding those numbers there, we will talk about it, and I will just make sure it match the one that was there. It's not going to match it anymore because I changed that number, and this number will change as well because it's including the number from the beginning of the year as well. And this one is a formula, and this one is a formula. So we don't have any dollar amount that we added there, so we are not going to add anything back there. And here we do have a number. Instead of copying the number, that amount to paste at the beginning of the year, I'm just adding what was in there in that formula to this, because the formula is already taking the beginning of the year into consideration and adding numbers to it. So we are just going to copy and paste that, and you can see that we have our number there. And from that point, we will go to the bottom and we will do the same. So here we don't have any number, therefore we will take that one out. And here we have this number. We have a number inside of the formula. We will just copy that number to add it to this one. And because it's taking the beginning of the year into consideration and adding it to it, we are just going to see what it is adding to it and copy that as well. And we have the total assets matching the total liability. Now that we copy year end data to the beginning of the previous year end data to the beginning of the current, the 2023 year, now we will update year end for 2023. So cash, the first number under asset is cash. So that means you'll need to go to your bank account to see the cash available at the end of 2023. It's good to save your statement while on December 31st if you can, or update your financial data by then as well. So we have this example here, and we have, let's go to the beginning. We have a reconciliation of the bank account, and we have that 808.80 there to work with. And let's go down. There is a $6.36 it is added. Okay, 808.80. So we'll have 808.80 there, and we can see that there, and it seems like hold on, let's go back to the task. Yeah, this one is the checking account and this one is the saving account, so we can just combine both. Therefore we'll use this number instead of just the checking. So 809.01, let's make sure we have that right. Okay, so it is a good idea to go through your bank account periodically to record transactions through that are going through your business bank account, to make sure you agree with every transaction so that you have the balance, your cash available on hand accurate, that you agree on. Inventory. So if you have inventory, you have physical products you sell, you have inventory, then you need to go find the value of your inventory at the end of 2023. And we have inventory and sales for 2023 as an example to use, that will go on that line as well. So inventory at the end of the year, 797043, we can use that in this example. 797043, 7970.43. let's double check to make sure we got it right. 7970, we are looking at this number, 797043, 797043, and we can compare it to the example that we have here as well to make sure we are getting our numbers right. So now depreciation. So if you have assets, business assets that you are depreciating, you will complete the year end. So the way I tend to have some notes to remind myself what I'm putting in those. So pretty much year end has 2 columns, beginning of the year has 2 columns. So for they say, let me put my, so building and other depreciable assets, pretty much if you purchase assets during the year, you will add that number in that cell, and in this point we will take that 997 out because we already added to the beginning of the year when we copy things from right to left. So we'll take it out of there, and when we do that, you'll notice that beginning of the year and end year will be the same, and here we'll take the number that we copy out earlier out as well for now on, and that will be less accumulated depreciation. So depreciation that you took out throughout the years will go on that line, and the last column will do the calculation to tell you the remaining depreciable amount. So that's how it works, and the same thing goes for amortization as well. And we can take this number out of here as well because it's already at the beginning of the year. Now we will go and work on the depreciable asset. So you'll go through your depreciation document to see if you purchase assets or place assets in service during 2023. So we will go to our document and pull our depreciation asset. And probably shortly we will talk about how to depreciate an asset. But anyway, so for 2023 in this example we have 854.66 purchase that we are going to add, and I'm just going to copy that, and we will go to the balance sheet, and I will just paste it somewhere so that I'll paste the value so that I can have the full amount, and I will copy it from there and I will add it inside the formula, and that is the depreciable total. And now less accumulated depreciation will include the amount you want to pretty much the depreciation you are going to take for 2023. You'll include that. So I don't know if I open that document. So we will, and that will include not just 2023 asset that you purchased, but if you have asset purchased from prior year that you are depreciating, you are not done depreciating, that will be included in it for the depreciation deduction that you'll take in 2023. So we will open a summary spreadsheet that total all of that for us as well, and the depreciation that we'll take in this example, we will copy that amount and we will go and let's paste it on the side first to see the amount. We'll paste it as a value to take the formula out. And we will get in and we will add it. And let's assume I added right. Yeah, so with a negative number. Let's see why I've been doing that, because I'm just summarizing here. Instead of doing the subtraction here, I'm just adding it as a negative number. That way when I add both, it'll do the subtraction. So by doing that, it's telling us that we have this amount left to depreciate. So one way we can double check to see if it seems accurate, first let's see if the numbers match what we have in the example on the other tab. So one way we can check to see if that number is accurate that is left to depreciate would be to go through your prior year depreciation so this one does not have anything. To go to prior year depreciation and see the other remaining years that you have left to depreciate, and we can just do that a little bit quickly here. Let's see if I can open this. I'm just going to pull the number, the total from those two. Total is at the bottom, and we will go to 2021 and the remaining to depreciate, we will add it as well. And that's how you can double check your numbers to see if your balance sheet, you are putting numbers in it well. That's one way to do that, if you are not using a software to automatically do those things for you. So for this 2022, the total is at the bottom, 698, 2023. $762.20. And now let's go back to the balance sheet and compare. And you can see we have some cents issue, and that's pretty much it. So that's good enough. And that's how the balance sheet, like the way I use it, that's the way I do. So pretty much the first row, whether it is this one or the beginning of the year or the end of the year, pretty much is the total depreciable assets you have in the business. And the less accumulated depreciation is the depreciation you took throughout the years. And then the middle, for the beginning of the year, the middle column will just tell you how much you have left to depreciate, and at the end of the year will tell you how much you have left to depreciate after you included the depreciable asset you purchased for the business during that year, and the depreciation deduction you are going to take that year. It will calculate the depreciable asset left. So, and this one to see is again another example. When we go back and we total everything, it should be close to that number as well. For let's go back again and try. Let's go to okay, so the total assets amount, so 658.10 plus. We'll go to the next year, and then that will be 318.81 plus pretty much we are totaling the total asset, business assets, plus 2384.47 plus 9.97 plus purchases during 2023. In this example, A54.66. And then when we go to the balance sheet, you can see that 4226.01 is there. So the same way that if we total the deduction taken throughout the years as well, it will be close to that number, leaving us to how much we have left to depreciate going forward. So, and that is an asset for the business. So the same thing will work for the amortization section as well. So now that we're in the amortization section, we will go and check if we purchase an intangible product in 2023. And it does not look like it. Therefore, that portion area will remain still zero. And then if there is the amortization deduction to take for 2023, we need to include it. So since we already have an amortization, an intangible assets amount, and we have some dollar amount to depreciate remaining to amortize, since that we are going to take an amortization deduction for the year, Therefore, we'll go to the years that we are amortizing, and we will pull the amount that we are going to deduct for 2023, and let me put that number and copy it, and with a negative number I will add a negative sign. I'll add it in it. So let me take this out of here before I forget. So by doing that is telling me how much I have left to amortize, and when we can go back and double check to see if we are doing it well, we can see that we have one more amortization deduction to take, and that's that 11cc1 to make it off to $37.99. So, and this gives us the total asset for the business in this example. So that's one way to calculate the total assets for your business. So now that we did that, we can continue and check the liability section, because the total assets and total liability and the equity should match. So account payable, we can see there is an account payable, and we are going to use one in this example. I don't have it here, but for some purchases, let's go to the bottom. Some purchases toward the end of the year were not paid, were incurred through credit card, and they were not paid right away. They were paid right after the year ended. Therefore, you go through your credit card, like at the end of December, you can check how much balance you have on your credit cards, and I believe it's 1cc something. So let's see what we use in this example here. 1cc 58. So 1cc 58, because the product purchase is in the asset section on top, while the money used to purchase has not come out of the account year. Therefore, it's good to put that in the liability section, that it was purchased, through credit card. Okay, so now capital account, and that's something that is good to track as well. And if the business capital contribution, you'll find that when you reconcile your bank account, but it's good to have a spreadsheet for capital contribution where you put those contributions as well, to have a summarized somewhere. And in this example, we do not have any contribution for 2023. Therefore, we need to make sure we take what we already put at the beginning of the years out of that end year. So we didn't make any capital contribution, and that in 2023. Therefore, the year end and the beginning year will be the same. So now here we need to take what was there as well, because we added at the beginning of the year. We need to take it out of there. So now you'll notice that there is a difference between the total assets and the total liability. So that difference will be in the return, will be added to the return earning for both to balance. That's the way I like to do it. And the difference is little bit is that. So, but yeah. So now, if you know so pretty much the returning in is like the profit or the loss from the business. So that's where we will put that difference for the liability to balance out if we know we have everything in the other spot well. So that will conclude how we will complete the balance sheet, because we didn't work on the loss or the profit of the business. That's why I will leave it like that for now. But pretty much this amount is going to be added there for that to zero out. And I can technically do that in some way now as well. The business has a loss, and as you can see, because the asset is less, so there will be a loss that will be entered for both to match. So this concludes how we complete the Schedule L or the balance sheet for the S Corp, and how to calculate the total asset for the business. Now that we did that, we'll take this number and go put it on Form 1120S, since that's the form that numbers will go to. So that's 10A70.98. So we'll go to the Form 1120S, and let's make it a little bit smaller. If no, we cannot, but let's go back and check that number again. 10A70. $10A71 if we want to round. And let's just make sure we have our number right. 10A71. Okay, so is this corporation? So check if M3 is attached. We are not going to check anything just yet, but just know that if you are required to file M3, you will need to check it if you complete it and you are going to attach it. So that's how you figure out the total assets for the S corporation, and that number will go on line or box F, total assets. G, is the corporation electing to be an S corp beginning with this tax year? We are going to say no. So check if final return, name change, address change, amendment, nothing is applicable here. We are going to leave it alone. Enter the number of shareholders who were shareholder during any part of the year. We are going to put 5 in this example. Check if corporation, 1, aggregate activities, group activities. We are not going to check anything, but you can read the instructions to find it. And again, to pull the form, it's good to go to IRS website, and you can just put, even if you do 1120S, you search it in the search bar, you will download the forms, the instructions, and you will read through the instructions. You will download the Schedule K-1 as well. But again, and any other form that you might need, but again, it is a good idea to follow with a tax software. You can use the draft to put numbers in it to have an idea what you are expecting, and you use a tax software to file the return, so that one number that will go on multiple form or multiple lines, it can automatically do that for you. Okay, so to aggregate activities or group activities, so if you have multiple business activities and you want to group them, you will check it, but those activities have to have certain things in common for that to be grouped. And you cannot group rental property and active business activities together. So, but yeah, we are not going to group anything. So by now grouping things, we are going to just leave it blank. So now income, part 1, income, line 1, gross receipt or sale. So you will put your total sales on that line, and if you have inventory, then you need to go check your inventory. So we will go to our inventory and sale spreadsheet, and the total sales 25.97. We'll go back and we'll put 25.97. And if you have returns, you'll add returns. Let's make sure we are using the 25.97, and if there is any return, you'll add it. So we'll go back and the balance is the total receipt minus the return, and that will be 25.97. So line 2, cost of goods sold, attach form 1125A. So when you are using a task software, they ask you question. Depending on how you answer the question, they'll pull that form for your numbers for whatever answer you are giving to go on that. So on this draft, we'll go and get the form 1125. Form 1125A. Let me see if I have one. We have a video on how to file that form, but we can quickly pull the form. If I can find it. One 125. Where are you? Okay. Let's just copy it. And let's paste it. And let's open it here. Okay, so how to complete form 1125A, cost of goods sold. Inventory at the beginning of the year. First, you'll put your business name and your EIN number. I like to just keep my things as a cap, and then everything will be capitalized when I'm tapping, but I didn't do it this time. And we will go to the inventory and sales spreadsheet, and we will, let's go here. Inventory at the beginning of the year. Let's see if we can make this a little bit on the smaller side. We might need to do this as well. And inventory at the beginning of the year, you can pull the full amount and you can round it. It's going to be 8044.44. Line 2 is purchases during the year. Purchases during the year. And purchases during the year, we are going to use that number, and I have a video on how to file this form. that we explain those in detail. So on line 3, we are not going to put anything on line 3. Line 4, line 5, other costs. Line 6, total, line 1 through 5. So line 1 through 5, we can take the calculator. 44.44 plus 88.36 is 89.24.8 is line 6. 89.24 you can just put 79 or 80, why not? And line 7, inventory at year end. 79.70.43. 79.70.43. Cost of goods sold is line 8. Is the subtraction between line 7 and 6. So 89.24.80 minus 79.70.43 is 954.37. 954.37, and we can make sure we 954.37. Okay, so now line 9, check all methods used. Valuing this we can just check that. Check if there was a written down of abnormal goods. We can just leave that alone. Check if the LIFO, no, first in first out, is what we use, so we are not checking that. And E, if the property was produced or occurred for resale, do the rule of apply to this entity? No. Was there any change in the determined quantity, quality, cost, and valuation between opening and closing inventory? No. Okay, so now cost of goods sold, line 8, you can see it will go on form 1120S, and it's going to be 954. Let's go to our form 950. I think we can close this. I don't know what I close, but okay. So 954. 954 when it's rounded. Okay, so gross profit, you will subtract 2 from 1, and 2597 minus 954, 1643. 1643. And if you have anything that will go on form 4797, you'll attach that and will enter the amount on line 4. If there is any other income, it will go on line 5, and when you read it, it's good to have in the instruction and go through it. And if you think an information will be, you are now sure about a line, it's good to check the line. And there is some credit, that some employment credit, that if you take, you'll add it on line 5 instead of deducting it under the tax section. So but we'll leave a blank in this section, and the total income will be to total line 3, 4, and 5, and that will be 1643. And that 1643 we can check on our inventory, and 1643. So we can At this point, I think we can close this one. $16.43. So line 7, compensation of officers. There is a dollar amount. I think if officers earn more than $250,000 a year, you will have to file Form 1125E. And let's see here, 1125E. But again, you can read in the instruction, but I believe it's $250K a year, but total receipt is 500,000. Let's just click on it for you to see the form. It has instructions as well that can help you completed. So complete Form 1125E only if the total receipts are 500,000 or more. So if your gross revenue is, on line 1A is 500,000 or more, yeah, they will want you to complete that, to list the officers of the business, the social security, their time spent on the business in terms of percentage, their ownership of the business, and their salaries. And I think it's a way to see if they collect enough in terms of salaries or not. So that's what the form in some way is. So let's go back to our form. We don't need it in this example, and we are going to go to our expenses form, expenses, and use that instead. Let me just group a little bit here. And compensation is 200. It is just the way I do it, but just know that it's not one way. And the reason why I'm saying that is technically the total compensation of officers, or the salary and wages if you have employees, will be what goes on the W2 line 1, if I'm saying it right. Let's see if we can open a W2 here, but it is not what I'm putting there. I'm putting take home, and the reason is the way I record the expenses. I put the tax withheld from the employees' wages and the employer portion of Social Security and Medicaid. I record those as an expense, and therefore I just want to put the take home, because that's the way I record it as well, the take home, instead of the gross payroll or the gross wages. So instead of trying to break it apart again, I just prefer to put it on the return the way I have it in the taxes. But just know that, let's use an example here, that it's not the only way to do it. But yeah, it will be understandable to put the total wages on line 1 on that for officers, the total of it on line 7, if that makes sense, and the total wages for all the employees on line 8. If you do that, just make sure under taxes and licenses you do not include the federal income tax withheld and social security tax withheld and Medicaid tax withheld, you don't deduct it. You only deduct the employer portion, because the employee portion is already included in the wages that you reported on line 7 or 8 if you go that route. The way I put that 200 there is the take-home pay. So that means it is the line 1 minus line 2, line 3. No, line 1 minus line 2, line 3, and line 6. The take-home pay. And the federal income tax withheld, the social security tax withheld, and the Medicaid tax withheld from the employee wages, and the employer portion of social security tax and Medicaid tax, I combine them as one expense, paying that to IRS, therefore booking in the journal like that as well. And then the take-home pay was recorded as take-home pay as well. So in that, for that reason, I'll put the take-home pay, and then under taxes and licenses, I'll put the employee portion of the federal income tax withheld, social security tax withheld, and Medicaid tax withheld, and the employer portion of social security tax and Medicaid tax, I'll put out on in taxes and licenses. Just know that depending on how you record your expenses for payroll, the way you will do it will be different from the way I did it. Okay, but it will be more accurate in my opinion to put the gross payroll on line 7 or 8, and then put the employer portion of the social security and Medicaid and the food tax on line 12. Okay, so salary and wages, we do not have any on for line 8. We leave a blank. Repair and maintenance, we do not have any, but if you have any, you'll add it. Bad debt, we leave a blank in this example. Rent, we leave a blank, but if you are renting a place for your business, you might want to put it there. Taxes and licenses, so you'll go to your bookkeeping spreadsheet and look for your taxes and licenses, and we are going to add it. So let me see, 130, let me go back again, 139. 139. Okay, and at this point I think I'm going to put 138 because I know that I'll run into a rounding issue shortly. So interest, line 13, we will go to that bookkeeping and see if we have anything for that line. We do not. So line 14, depreciation. So depreciation, so when you get to this area, if you purchase assets for the current year, you will need to depreciate. You will need to file form 4562 and add it. So how do you depreciate a business asset? You will track the assets you purchased during the year, the date you purchased them, the date you start using it in the business, or you have them ready to use in the business, and if you are using them just for business. And it's good to know the quarters. So if you know the date you place them in business, you'll know the quarters automatically. So we have those. Now we will go to publication 946, how to depreciate a property. how to depreciate a property. And let me see here. We'll go to Appendix B. And Appendix B is going to read the instruction there, but just the way it works is Appendix B has Table B1 and Table B2. So if we find, let's see here, I'm going to summarize it. So you'll need to look at both Table B1 and Table B2 to find the current recovery period. So if the property is listed in Table B1, you use the recovery period shown in that table. However, if the property is specifically listed in Table B2 under the type of activity in which it is used, you use the recovery period listed under that activity. So use the table in the order shown below to determine the recovery period of your depreciable property. We use the depreciation table, the rate table, from from Form 4562 and Publication 946 to depreciate our asset. Therefore, we'll go with the instruction in it. So now they say that if you check Table B1 for a description of a property, if the description is in the Table B1, also check Table B2 for the activity the property is used in. And if under the title, if the property is specifically included in that asset class, so if the activity is described in Table B2, read the text. If the property is specifically included. If it is, use the recovery period shown in the appropriate column of the Table B2. If the activity is not described in Table B2, or if the activity is described but the property is not specifically mentioned, you'll go use Table B1. So then you use the recovery period shown in the appropriate column following the description of the property in Table B1. So we are going to rely on that, and there is another one we are going to rely on as well. If the property is not listed in Table B1, check Table B2 to find the activity in which the property is being used and use the recovery period shown in the appropriate column following the description. So now that we know what they are saying, we will read through the asset we put on that we put in service. So the first one is not let's work on the first one. The first one is a software, so it's not going to apply for the first one. The first one, we will read about it in the instructions for Form 4562, depreciation and amortization, and it should be on page 7, computer software. Use the straight line method over 36 months. So is on page 7, and computer software is intangible asset other than 197 intangible. So intangible property other than 197 intangible include the following, and they list them, but one of them, they list them. You'll see which one is related to yours. One of them is computer software. The thing is, those things should be amortized, but they put that description in the depreciation section. Therefore, I'm going to include it in my depreciable assets. So computer software, they say to use straight line method and to use 36 months. So I'm going to see how that is going to fit within my depreciation thing. So I put 36 months and I left it like that for now. And now we have a USB drive and a code related to it. So those, we are going to go back to publication 946, and we'll go to table B1. And we will notice that they have computers and they have the peripheral equipment, and they list them, and among them they list disk drive, file drives, and so forth. So I'm assuming a USB drive is an external memory will be included in that category. Therefore, I'm using the asset class 0012 for it, and the recovery period is 5, and the class life years is 6. But before I do anything with that, I need to go to table B2 to look for the activity it is used in, because they say look to see if you'll find the assets in table B1, and then go look for the activity it is using to see if they mention it in it. If they mention it there, then that's the recovery period from the business activity that we will use. But if they didn't specifically mention it there, then we'll come back and use table B1. So I will go to table B2, and you can read through it, but I know where we will find that activity. So 57.0 distributive trade and services. So when you find the activity, you read the text. Include assets used in wholesale and retail trade and personal and professional services. So that pretty much includes retail and services. And the USB drive is not specifically mentioned here. Therefore, we'll go back and use table B1. So I will go to my spreadsheet, and I will put for those class life in years is 6. You can see it's 6 class life years. Therefore, I put 6, and I'll focus on those two. Okay, and classification property. So now that we know class life is 6 and recovery period is 5, from that table we'll put 5. Classification property will help us find that as well. So classification property, you'll find that on publication, on the not in the publication but in the instructions for form 94562, and probably page 9 or 10. So class life in years, we saw that ours is 6, so more than 5 but less than 10. The classification is 5 year property. So we copy that to our spreadsheet. We see 5 year property. The recovery period is from our publication our 946, and recovery period for GDS, which we are using for the depreciation, is 5, and it should match the instruction as well. For classification 5, if we go up a little bit, we can find the recovery period. So you find the class life in years to locate the right classification, and you use this classification to find the recovery period. So 5 year property, recovery period is 5. It match what we have on the publication 946 as well, and we have it. So for the software, they say in the instruction to use 36 months, which is pretty much 3 years as well. So if we use that as class life 36 months, is 4 or less, so the classification is 3-year property, therefore the recovery period is 3, which is that 36 months as well. So I have 36 months and I have 3. So now that we have those two, we will go to the remaining 3. So by looking at the other assets, we will go to the publication 946, and we know that table B1. By reading through it, we do not find any of those equipment listed in here. You have the furnitures, you have those peripheral, you have the print, printing machine types. But then when we read all the table B1, we don't see any of those equipment listed. Therefore, we do not have the item, we do not have the property described in table B1. We'll go to table B2. So if we go, we went too far. If we go to the ends, if the property is not listed in table B1, check table B2 to find the activity in which the property is being used and use the recovery period shown there. So we'll go to our business activity. A little bit too far. Table B2 and class, asset class 57.0, class life in years is 9, the recovery period under GDS is 5. We need those information. We will go back to the spreadsheet, and class life is 9, and we have 9. And we have the assets class. For our own record, we have the depreciation method that we are using is GDS, and under GDS we have the recovery period of 5. But again, we can confirm it with the classification as well by going to the instruction for form 4562. And so more than 5 but less than 10, the 9-year class class life in years is included there. Therefore the classification is 5-year property, and when we go to the recovery period section, 5-year property recovery period is 5. So you'll depreciate it for 5 years. So that is 5. So we have those 5 there. A month placing in service is Q1, because we want to make sure we didn't place anything in service in Q4 that total to 40% or more for the whole year. Otherwise, you might need to use mid-quarter convention, and I don't like to use mid-quarter convention. So convention type to use, we are going to use a half year. So there is mid-quarter, mid-month, and a half year. And the mid-month is usually for real estate, and mid-quarter is if you place things in service in your business, or you purchase asset and place in service in your business in the last quarter of the year, and the total of those placed in the last quarter of the year without including real estate in it, the total is 40% and more than what you place in service for the whole year. You'll use mid-quarter for all the asset placed in service during the year, and I try to avoid that as much as possible. For that reason, I don't like to make purchases at the end of the year for the business when it comes to assets, unless I'm sure that I'm not going to go over that 40% threshold, so that I can just use a half year. And by using half year just mean that you are going to depreciate for, in this example, when we are going to, for the 5 year, time frame you are going to depreciate for 6 years. So that means the first year you'll take a half year depreciation, and for the remaining year you'll take full year depreciation, but then the last year you'll take a half year as well. So knowing so now to do that, let's go, now that we have data up to that point, we'll go back to publication 946 and we'll go to appendix A. And appendix A, sorry about that if that is dizzying, but let's see. Okay, we are getting closer. Appendix A, you will, so we know we are going to use macro system GDS. We want to, from what we have on our spreadsheet, we want to find the information here that will lead to it to show us the table we should use to depreciate the rates. So we know we are going to use ZDS, and you have the option between 200 and 150, and I just like to use straight line. So we are going to use the depreciation method straight line and recovery period, and we have recovery period 3 and 5 on our spreadsheet. You can see it, 3 and 5. And under straight line GDS, they say pretty much anything goes there. And convention, half year. So we are going to stay within half year, not mid-quarter, but half year. And class life, any, but again, our class life, no, not class life, but classification, we have 3 and 5, but here again 3, but you can see that for 3 and 5 we have 200% and 150. That's, you know, we made that requirement for the half quarter, for the half year, but we are going to see with straight line half year any, and therefore the month will not matter. Any month you place in service, you will use table A8. So we'll put table A8 on our spreadsheet and we'll go find the rates, and we'll find that by scrolling down. And if you have residential things to work on, you'll find them as well in the appendix A, but we are looking for table A8. So we'll keep scrolling down. Table A8. So table A8, now that we found table A8, we need to find the year. So first we have a 3 year to work with. So 3, you see recovery period in years. So you need to find your years that you are going to depreciate. So 3 is the software, and you can see 1, 2, 3, 4. The first and the last year will be half the year. So that is going to be that. Another option that could have work for that software is, I think, to amortize it, because when they say 36 months, you'll use the number of year when you purchase, the number of year left within that year divided by 36 to find the percentage for that first year, and you'll do the same for the remaining year for the last year. So, but in our example, we purchased the item at the beginning of the year. Therefore, technically, we could have take the full depreciation that first year and just make it exactly 3 years. But because they put that instruction to depreciate for 36 months within depreciation, I'm just going to try to, it's just my way of doing it. I'm just going to try to blend it in with the other assets by using the same strategy that I'm going to use for the others. So therefore, I'm going to just take half depreciation for the first year instead of the full depreciation. Since I purchased it in January, and that's 12 months, I'm going to just take half depreciation the first year, half depreciation the last year, and take full depreciation the 2 years between. So I'm going to copy those rates to the spreadsheet, and we have a 16, 66. You can see a 16, 67, and 33, and 33, and then we have 16. So pretty much the way it works, if I got it right, it will be 6 divided by 36. You can see 16, 67, and that's what 16, 67 is. And if I do 12 divided by 36, is giving you that 33.33. But okay, so pretty much that 36 month, the rate is going to work for it. So now that the rate is there, we'll do it for the others as well. Those are 5-year recovery period. So we'll go back and we'll look for 5. So 5. Therefore, we'll copy this rate. We'll recover the assets value within 6 years. 1, 2, 3, 4, 5, 6. Half the first year, half the last year, and full between. So it's pretty much like 60 month. Yeah, 5 times 12 is 60 months. So 12 divided by 60 will give you that 20%. And the half year, the first year, and the last year, 6 months divided by 60 will give you that 10%. So that's that and those between. So I'm going to go with this 10, 20, 20, 20, and last year will be 10. So you can see we have them here as well. Now that we have the rates put on our spreadsheet is going to calculate the rate for us. So pretty much what is happening is taking the amount of the assets, the basis for depreciation, that's the full amount, times the rate. That will give you the amount. Let me see if I can I'm not going to do that just yet. Maybe here, let me see if I can group this. Now if I do that, you won't see what I'm doing either. So pretty much what I wanted to say is, for every year you'll take the original amount for depreciation, the original basis for depreciation, times the rate. You don't use the remaining basis to depreciate, but the original basis to depreciate that you started with the first year, that's why you will use times the rate. So we can say 2024, 2024 will still take that original amount times 33%. 2025, it's going to take that same original amount times the rate for that third year, and so forth. And by doing that, at the end of the year, the total depreciated should match the original amount you started with. And that's that. And so forth. And I can do another example here. You can see the first year is taking the original amount times 10%. The second year is taking the original amount times 20%. The third year is taking the original amount times the third year rate, 20%, and so forth. And by doing that, by the time it's depreciated for 6 years, we'll have the full amount that we started with. So at the top, the spreadsheet is pretty much summing everything for that year for us and so forth, so that you have the depreciation set for those assets. If you do not change the basis for depreciation over the years, those are the amount you will take for depreciation for those years to recover the full amount. So that is just for the asset placed in service during the purchase and placed in service during the year. But when you have other assets, and while we added, we can talk about amortization as well. If you have assets that you need to amortize, you will pretty much go to the instructions for depreciation, and the instruction will have amortization section, and you'll be able to see the code. Let me see if I can find it where they started. Those are listed property. Amortization. So amortization has code. So you have to find what you are going to amortize to see the right code to use and to see for how long you need to amortize it. One will be business startup cost as well. There is a certain dollar amount that you can expense the first year, and if you do not expense the full amount, you'll amortize the remaining, and they will tell you for how long you will amortize the rest. 180 month, yeah, 180 month, and the code you will use and so forth are in the the section 196 and so forth, what it is. So it's good to go to and beside the software, the other than 197 intangible amortized for 15 years, 180 months. So yeah, it's good to go through the amortization sections to see what you are going to amortize and see for how long you need to amortize it and what the code is, what section that is. And when you find out, you will pretty much put the product, the cost, when you place it in service, the amortizable amount, and the code, and the how long you need to amortize it, and then the rate. The rate is pretty much is going to take, like in this example, it was placed in service in November, so 1 month left. So 1 month divided by 36 give us the first year rate, and then the second year use 12 months divided by that amount, and so forth. And if you do it well, the total should be 100%. So that's something to consider. The same thing for the depreciation as well, I believe. But anyway, for this one, it needs to be 100%. So, and then your depreciation, your amortizable amount will take the original amount times the first year rate. The second year will take the amortizable amount, original amount, times the second year rate, and so forth. And when you do it well, the total amortization deduction will total to the full amount that you started with. And that will go on Form 4562 amortization session. So now if you have depreciable asset from prior year, you need to know how much you are going to take deduction wise for the current year and have that. So we have a summarized spreadsheet that we use, and in this we just have deduction for the current year that we want to make sure deduction for we can just go back. Deduction for, you will go through your deduction things to see how you calculate it for all the years, to see the amount you need to take for the year you are filing for, and put and record that amount. And then we have 2020 here. We'll go back and look for 2020 document to see how much from those from that asset year we need to depreciate. So we have 6376, and then we have 2021. We need to go to 2021 document. So it's good to have your assets well filed and know how much you are taking. But if you are using a software, I believe the software should be able to do it for you. So for the current year, you are buying, you are filing for 473, and then 2022 and 2022. 2022, you will add that as well, and that will total those for the prior year. And for the 2023 that you place asset in service, it'll go on a separate line on the form 4562. So it's good to know that amount separately from the prior year depreciation deduction to take as well. And now the 246 we have done. So pretty much that's how you depreciate an asset. And if you have amortization from prior year, you want to know how much your amortization is going to be for the year you are filing for as well. Now that you have your numbers together, we can use a draft to put them on it, but just keep in mind that, again, it's good to use a tax software to file your return, and the tax software will, I'm just going to do one here, and then I will show you what I already did. But the tax software will be able to put those in the form 4562 for you. So again, you'll put your business name, you'll put your business, whatever, we are just going to say retail, that the asset is used in, and we'll put EIN. And there is the first part, section 179. If you have business asset placed in service and you want to expense the full amount the first year, you'll use section 179. You can read instruction related to that. And a lot of tax software will suggest this because they allow you to take the maximum deduction the first year. I don't use it, but you have that option. And you have part 2, special depreciation allowance as well. What it didn't go through 179 in full, might go through the special depreciation allowance if the asset qualify for it, and anything that is left out of that will go through depreciation, normal depreciation, and the number of years to depreciate it. But you can see that on our depreciation spreadsheet, section 179 we left a blank, special deduction we left a blank. So we chose not to claim those. So on an attachment, it's good to have an attachment and put on it that you claim not to file section 179 and special depreciation allowance on assets on 5-year asset class and 7-year property asset class. 3-year, we don't have 7, a 3-year property asset class and 5-year property asset class. So you can add that as an attachment to your return. But let's go back. So we are going to go to part 3. So macro depreciation, and that's what we work on. Line 17, macro depreciation for asset placed in service during the time beginning before 2023. So we will go to our summary of depreciation. So that will be the 542.35 before 2023. That's 542.35. So we'll put that 542 and line 8. If you are electing to group assets, you'll check that, and I'm not going to group assets. To group assets, like if you have multiple 5-year property like the way we have, you can group them together, and we will have all our 5-year on one line and that 3-year on one line as well. You group by year. So but I'm not going to group, I'm just going to leave it like that. So that means I might have to use multiple form to put my to complete. And the way I'm going to do that is, first on this one, on one of the form I will complete everything, but on the others I will just complete section B for it. So for this one I will complete for the 30-year property, they say depreciation basis, so the amount. So I'm going to put 104.94, so pretty much 105. And recovery period is 3. Convention is half year, and method is S/L. And all of that came from our spreadsheet. We summarized those information on it. We have recovery period, we have the amount, we have the recovery period, we have the convention, and we have the depreciation method. And the amount to take is 17. So we will go back and we will put 17. Depreciation deduction. So the 5-year property will add 1 here. So I'm just going to put 4, and recovery period is 5, a half year convention, and SL, and the amounts I'm just going to put 1 because I think I might have to round it, and I think I'll just go with that. Otherwise something here will need to round for everything to total for me. So I'm going to put 1 for now for that one. And that, so now I'm going to go back, and I'm going to do, let me copy it and paste it. I'll name this 2, and we will open it. Okay, because I didn't save things on this, they didn't pull out. So here I'm going to have business name, I'm going to have the retail, and I'm going to have the EIN, and let me save that. And on this we are going to go to section B, and we will put the next item, 114, recovery period 5. In fact, the way I'm going to do that so that it can go a little bit for me faster, convention, was it? Yeah, convention is that. The method is SL. and I'm going to save it. Okay, so now I'm going to put 114, and we will go and find the amount. 114, and the amount is 11. Okay, so we will go back, and because we didn't group the assets, that's the way I like to do it. I only have one spot for 5-year property, and I have multiple 5-year property assets. So I will use another form, and this one, now I can go and save this one, and it will have what we already put in it for us, and we will put the basis for the next one. $535, and you see the 535 how it's working. And we will go back 535, and we will use 54. Okay, so we have 2 more, so we will copy this one, and I can copy it again. Okay, so now we can open the 4. We can save this one, and we can open this one. And we have 32 and 3 for the depreciation. So we have 32 and the depreciation is 3. We will save that, and we will open the last one. And it's CC4 for the amount, and it is CC4 and 6. Okay, so now we need to total them, so we can use the calculator. Here we have 6 plus, we'll go to this one plus 3, and we'll go to the third one plus 54, plus this one 11, and this one we have 18, and that brings it to 92. You can see it, 92. Okay, so we will go back again, so 92, and it will go on the one that we are going to put the summary on. So they say lease a property. Lease a property is if you have car or things that you use between personal use and business use, it is on part 5, but the total will come on part 4 for the summary, but we are going to leave 21 alone. The total for line 22 is total amount from 12, 14, 17, 12. That is section 179. $14 for special depreciation allowance through 17. So 14, 15, 16, and 17. So in this, we are just going to 17 and line 19, 20. 19, 20, the residential are there, and then you have the ADS section as well. So we total to 92 so far. We are going to add that 542 to it, so plus 542, that give us 634, and it'll go on line 22, 634. For assets shown above and placed in service during the current year, enter the portion of the basis attributable to section that we are just going to leave it like that. So 634, we can go to our spreadsheet to see if, yeah, 634, we have 635 here. So that means, again, rounding issue, something needed to be rounded up. My calculation was off somewhere, I'm not sure, but anyway, you get the idea. So the total, if we total it well, then that means one of the things needs to be rounded up. Let's go back and check it again. Okay, so we did 17 plus 1 plus, did we use 11? Okay, that 11 could be changed. We did 54, we did 3, we did 6, 92. So plus, wow, 5 something, 542, give us 364. But yeah, you get the idea. You run into those decimal issues, and you just have to adjust your numbers for that to match. So yeah, at this point we can, let me see, for these purposes though, for these purposes we can even round this number up a little bit so that it can total to 635 that we should have, or we will have to adjust the single one as well. It's up to you, whichever works for you, or you can leave it at 634 as well and have that few cents deduction later the last year too. That's one way. But for this example, we are going to leave it like that if our numbers are correct. And then we'll go to the amortization because we are amortizing something. So since if you purchase an amortization, an amortizable asset, intangible asset, then you will need to complete 42 with the name, the date that you start using it, the amount, and the session, the code session from the instruction that I point out earlier. You know, the session 177 intangible, for instance, where we again, and you'll add that 197, and then amortization period or percentage, you'll add it, and then you'll add the deduction you are taking for the year, and so forth. So amortization costs that begin during the year, you'll total those to line 43. We don't have anything for that, but total amount in column F. So okay, for amount for asset placed in service during the year, you'll put the amortization deduction for the year in those lines. For line 32, amortization of course that began before 2023 year will go on line 23, and that's where we'll go and look for our number and put that 12 or 13 for this amortization on that line. So we will go back and put what, 13 on that. So total amount in column F. total amount in column F. So amortization for the asset placed in service during 2023 plus amortization for asset placed in service before 2023, you'll total them all, and that'll be on line 44, and that will go on other deduction on form 1120S, and that is how you depreciate business asset and amortize business intangible assets. So if you want to see where those numbers will go, we'll go back to, now I can close. Keep in mind that those form, again, use a tax software. 4562, you have to attach it to the form 1120S. Okay, let's close this one. I think we can close this one. And so form 1120S part 1, line 14, depreciation for form 4562, now claim on cost of goods sold form. We'll go and pull out the one that has the summary on it, and it's going to be 635. So we'll pull that 635 or 634, whichever works. And then the amortization, where the amortization will go. The amortization is not going to go on the form, but it will go on the form, but it will go on other deduction. And other deduction, they say to attach a statement. Therefore, let me see if I have an example. Therefore, you will include those deductions that will go on line 20 on an attachment, and you remember to add that amortization to it as well. And we can look here, and you can see the amortization is included in it. In everything else that will go, and I'm using line 19 here, but let me see what is saying here. Other deduction is not line 19, is line 20 on form 1120S. So that means on this we will need to change that line 19 to line 20. And if I do that and I just drag it down, once we change the first one, it should be able to change everything there. And it's because when they change a line, they add a line on the form or remove one, those numbers will change. So you need to update it on your thing. So the attachment you will add to your return. Okay, we will have that, and your amortization will go on line 20 of your form 1120S is other deduction, and you need to add an attachment, and other things could go on that line. Therefore, it's good to include the amortization on that line. And the election for things we are not going to claim, we will add it to the attachment to have it as well. And that is how you depreciate a business assets, and how you report the depreciation and the amortization on your form 1120S. Thank you. So now we will continue, and now that we have our depreciation deduction, advertising. If you have advertisement cost, you'll add it there. Let's go to our bookkeeping again. We do not have that, so let's see if we can do this and put it somewhere to go with. So, and then we have pension, employer benefit program, energy, whatever, and then other deduction. So now let's make this a little bit bigger. Other deduction section. Again, those numbers, this line needs to change. It's not 19 anymore, it's 20, but I'm not going to change it here. But I know what other deduction lines are, and we are going to total them. And we want to make sure we included the amortization, and it is 1880. So we will go back and we will put that 1880. So total deduction, we want to total line 7 all the way to 20. So that will be 200, 138, 635, 1880, and it's 2853. 2853. We can double check that 2853, and we can see if we match our numbers as well. And we can see 2853, or we can total everything here. 2853. Okay, so now business profit or loss is going to take line 6 minus line 21. So 1643 minus 2853 will give us 1210 negative 1210. Okay, so we can compare that as well to see 1210. Let me see if I have the income. Yeah, 1210. That if we have the income after goods sold, and then we have the expenses, 1210 or 1211, but okay. So line 13, excess net passive income or LIFO. So if you choose LIFO, the recapture will go there, and pretty much this section is more for taxes that the business will owe. Usually S corp does not owe tax, but there are some instances that they might owe tax if there is accumulated excess passive income. A tax that the business is going to pay will go on this session, and pretty much, yeah, if you have any estimated tax made, you pretty much will add, yeah, you will complete the session 23 to 28 for that. But again, it's more so due to a task related to a specific type of activities that are not usual with an S corp, because usually S corp transfer profit and loss to the partners, and partners file their taxes, and that's the tax. Pretty much whether they distribute the profit to the partners or not, the partners will pay tax on those undistributed profits or claim the losses as well. So, but again, you can read the instructions, and if you are using the tax software, you'll be able to, depend on the question and how you answer them, if you anything needs to go on this form, you will be able to, it will complete it for you as well. So when you, so because we are going to use the tax software, I'm not going to point it out, but the signature of the officer and the date will go there. But again, with a tax software, you might just have to use a pin or so. But we can put the officer title, maybe talk with the preparator. We can just say no, at this point, it doesn't matter because the preparer will be the owner of the business as well. You leave the pre-preparer use only session alone if you are filing it for your own business. If you are filing it for a client, the client will pay you. That's when you will complete the pre-preparer use only with your name, your business, tax business name, address, and your PTN and your business EIN, phone number. And if you are self-employed, you will check that box as well. But then Schedule B. Schedule B, a check accounting method. In this example, we are using cash. We are going to check cash. But again, ESCO by default use accrual. But for small business, you can use cash. But to change between accrual and cash, you have to file from, I have no idea. I believe 3335. Let's see if I got it right here. 3335. To change the accounting method. Yeah, oh, that will be 3115 to change the accounting method. So you'll file form 3115 to change the accounting method and get a IRS approval. I don't know why it's doing that, but anyway, so let's save what we have so far since it's acting up. But anyway, and C, okay, so and the business activity. So the business activity here, I'm just going to put retail service. See the instruction and enter here. So, and we can just go to the instruction tool. And we are looking for Schedule B. And principal business activity code at the end of that, yes. And I didn't really talk about it much, but and for example, establishment probably selling prescription, select that code or whatever. So at the end of the instruction and enter the business activity and product and service. For non-stock retailers, select the PBA code by the primary product that your establishment sells. For example, establishment primarily selling prescription and non-prescription drug, select PBA code 46C110 pharmacy and that. But what does that have to do with business activity though? They are not asking for the code. The code is at the beginning. And again, if that's your first year, you want to find the code, you will go to the end. Let's just click on it here, but that will be the end of these instructions for form 1120S. You'll just locate your business. And for if you sell online and you are a retailer, you can just go to retail trade and you look for, because they do not have non-store retailer. You see non-store retailer, they say to look for what you sell and just use that code. So whatever you sell, you look for that code and that's what you add. They don't have a code for non-store retailer. Whether you have a brick and mortar or not, you can just use the code that is related to what you do. And if you are service, you'll go to service. And I believe the code that I'm using is more related to tax. Let's see the form again. We are using 541213. Yeah, tax preparation services. So we are using that, and I'm just going to keep it like that. So, and so I'll just do retail services or consulting, and the product, why not, I'll put consulting and home and living product. But that's just an example here, but okay. At the time, line 3, at any time during the year was any shareholder of the corporation an entity? The answer is no in this example. Otherwise, if it's yes, you'll complete Schedule B. Okay. 4, at the end of the year, did the corporation own 20% or more, directly or indirectly, or 50% or more of total stock issue outstanding from a foreign company? No. If yes, you'll need to complete that section. B, own directly 20% or 50% of profit or loss from foreign company? The answer is no. If it's yes, you'll need to complete that section. 5A, at the end of the tax year, did the corporation have any outstanding share of restricted stocks? No. B, at the end of the year, did the corporation have any outstanding stock option warrant similar instrument? No. Has this corporation filed Form 8918? No. Check this if the corporation issue publicly offered debt instrument. We leave a blank. Line A, if the corporation was a C Corp, which is no. Line 9, did the corporation have an election under Section 163? No. So you need to read and just check the right box. 10, does the corporation satisfy one of the following? The corporation own a pass-through entity with current and prior carryover excess business interest expenses. The corporation aggregate average annual gross receipts for the 3 preceding years more than 21 million? No. C, the corporation is a tax shelter? No. So we'll click that. If it's a yes, you'll complete Form 8990 and attach it. Does the corporation satisfy both of the following conditions? The corporation's total receipts for the tax year were less than $250,000. The corporation total assets at the end of the tax year were less than $250,000. That will be yes. So if it's yes, the corporation is now required to complete Schedule L, which is the balance sheet that we completed prior, and then M1. So if it's yes, you are required to complete Schedule L and M1. If it's yes, you are now required to complete Schedule L and M1. But if the total receipt is more than 250 and the asset is more than 250, if any one of those two conditions are not met, the answer will be no, and you will be required to complete Schedule L and M1. And Schedule M is the balance sheet, and M1 is the income statement in some sort, for some sort. But we can quickly go and take a look at those. And we have the balance sheet, and we just completed a draft version on a spreadsheet. But again, you can type those numbers on a spreadsheet, those things on a spreadsheet, and use that to track the balance sheet for your business, and those will just be used to complete the Schedule L if you have to complete it. But then M1 is the reconciliation of income loss per book with income loss per return as well, and that's that. So, but in this example, we are now required, because the total assets is less than 250,000. It's like 10,000 at the, you can see where what they are asking you, the total receipts is that, and the total assets is that. So line F, the total assets, and line 1A for the total receipts. That's what they are asking about. If it's more than 250,000 for the tax year, and if it's less than 250, the answer is yes. Then you are now required to complete Schedule L and M1. So now, line 12, during the tax year, did the corporation has any non-shareholder debt that was cancelled? No. 13, during the tax year, was the qualified subtractor terminated? No. Did the corporation make any payment in 2023 that will require to file 1099? No. If yes, you need to check yes, and if yes, will the corporation file that on time? So you need to check that as well. If the corporation attaching Form 8996, is the corporation doing that? The answer is no. At any time during the year, did the corporation receive a reward? No. Okay, so Schedule K. Schedule K, or ordinary business income loss, page 1. So we will go to line 22. $12.10 is a loss. We will take that. Negative $12.10. 10, line 2, net rental income, real estate income and loss, attached Form ADA 25. So if you have a rental property, the income and the loss, the income and the expenses will go on Form ADA 25, and then the profit or the loss from that form will go on schedule on line 2. But again, when you are using a tax software, automatically it will pull that for you to put the information in it. So if you have rental properties, you won't put your information on the first part of the form. The first part of the form is for active business, and you have expenses related as well on that first part. On Schedule K, you'll put income and expenses from passive activities. One of it is rental real estate or rental income. So it will go on Schedule 1. It won't go on Part 1 of Form 1120S. And then you have other gross rental as well. That will the profit from it will go on line 3. And then you have interest income. So if you have interest income, it will go on line 4. If you have dividend, it will go on line 5. If you have royalty income, it will go on line 6. So and so forth. So other income or loss, you on line 10, and deduction related to those. So if you claim Section 179 on the depreciation, instead of regular depreciation that we took, if you claim Section 179 and expense your asset, the cost of the asset the first year, that deduction will go on it will go on Schedule K. So we know that the depreciation deduction, the summary has line 12, which is the Section 179. But if you have Section 179 claimed, you are now going to put the full amount that includes Section 179 on your Form 1120S line 14 depreciation. Only the depreciation will go there. The amount that is 179 will go on Schedule K. And on line 11, it does not automatically decrease the profit of the business, but it flows to the partners for them to claim that on their tax return 1040. Charitable contribution will go on line 12. Business investment interest expense will go on line B, and other deduction will go there. So other deduction will include royalty expense, but we can go in the instructions and let's see how are we going to do that. So brace yourself. I'm going to scroll a little bit fast here. Okay, so and when you are reading through this, what might be related to what you are filing, you might want to highlight it. That way it's easy for you to find it. So other deduction, line 12D, royalty income deduction. Royalty income is code I. So for Schedule K1, you'll use code I, and for portfolio income, you'll use code L. But both expenses related to portfolio income and royalty income will go on line 12. And again, portfolio income, I don't really want to discuss that at this point, but you will find information. Let me see. Okay, wow. Okay, so portfolio income include all gross income other than income derived from the ordinary course of trade of business. So it's interest, dividend, royalty income from real estate investment trust, and so forth. So they explain what royalty income on page 10. But yeah, you will see the deduction, and if it's royalty related, the deduction you use code I on Schedule K1. But other deduction, you just type what that is. If that's royalty, if that's investment income, you'll put the amount on 12D, and then pretty much you can just read through to see what is pertinent to you. And again, you might want to use a task software so that you can complete all the subpart for you as well. Line 16, see non-deductible. We are going to put an amount there, and we will go to our bookkeeping here, and non-deductible we have 140, so we will add that. If you have foreign tax paid, it will be on line 16F, and we'll go to 17, investment income. There is some investment related information. You might want to read about it to see which type of investment income and expenses will go in this session. And then you have income, loss, and reconciliation. So you total line 1 through 10. So line 1 through 10, line 1 all the way through 10. So far we just have negative 1210 there, and you'll subtract 11 through 12D and 16F. 11 through 12D and 16F. We do not have anything there, therefore our amount here will be negative 1210 that we have on line 1 of Schedule K1, Schedule K. So we are now going to complete Schedule L, and we are not going to complete Schedule M, but then we have Schedule M2 here. Schedule M2 is not really clear for me how to complete it, but again, you have the instructions that you can read through, and I don't know if I'll be able to find it very quickly. Okay, the way I understand this schedule M2, and that's on page 48, the accumulated earning. C is if you have a C corp a prior year and it changed, so that will go on a C corp session. So I just feel like those two may not be related to some people, but then you have the A and B that might be related, but again you might want to read through it. But based on that assumption, let me go back again. Okay, so we have this one, but let me know what I'm okay. So based on that assumption, if I will complete that form, let's do this, and that is just my personal opinion, though does not mean it's the best way to do it, but you can rely on the software to do that. Let me see if I can do it this way. But the beginning of the year, I will put okay, and our negative number, okay, so is pretty much from the prior year. And ordinary income, if you have profit from the form 1120S, you'll put it on line 2. Any addition will be added, but then since we have a loss, we'll put it on the loss line 4, 1210. Any reduction, we'll put that non-deductible expense that we put on line 16C there, and they say to combine line 1 through 5, and if we combine that, that will be 211 minus 1210 minus 140, that gives us CCC1. Okay, so we'll put on line 6 CCC1, distribution none, therefore the balance will be line 6 minus line 7 is going to give us CCC1 here, and this one will give us, let's go back, and we have 2728 is just from prior year, 2728, and the total line 1 through 5, 2728, and no distribution here, we'll have 2728. That is how I will complete that, and I will not do anything with the accumulated earning and profit, because it's just in the instruction they say if it was a C corp in the prior year, which it was not, and I will not do anything with the other adjustment account. Again, they do not have a clear explanation on how to really complete this. They have an example, but again, it does not really answer my question. So I just feel like it is the way I will complete it if I was completing manually. But then for the following year, the total here will be added to this one. No, for the following year, the beginning year will be that CCC1. It will go on in this section here. So, and then any profit or loss from the year will be inside, and then you total them or subtraction, or depending on what you are doing, and any distribution, if there is any or not, will give you what it is at the end of the year. And this amount will be added to this amount as well at the beginning of the year when it moved to this session. So pretty much it is the way, because right now is the end of the year, and the end of the year will become the beginning of the following year amount. That, I don't know if it makes sense what I'm saying, but, and that is how you complete form 1120S and form 1120S schedule K. So how do you complete Form 1120S Schedule K1? I'm just going to do maybe 1 or 2 examples because we have 5 shareholders in the example, but we are just going to go back to the draft and again I didn't the other deduction I didn't dwell too much on it, but again for anything that you didn't have a SPA for, it will go on line 20, and that line 20 you are going to attach a statement for it. So let's go back again to just show an example of that. So here I use line 19, but it's line 20. But you can see anything that does not really have a specific SPA for it on the form line 1120, I just group them under other deduction, and I just and yeah, organizational cost that you will expense for the first year for the business will go on other deduction as well, and you'll have pretty much those are things that I tend to pull on it, and I have a SPA for it whether I have an expense for it or not. That way the draft document is there, and the attachment is draft to have the SPA for those, and you just copy it from your bookkeeping to the attachment to have it and double check your numbers. So that's how we got the okay. So why am I having this number here? 1285. Yeah, I will have to double check my numbers that I'm using the example to see if platform fee and platform fee at total rate. Let's see here. Okay, yeah, we have that, and we have the getaway that we total as well. We have okay, recording software is on the other side, that makes sense. And we have because we didn't group activity, we have the retail and the service separate. So the website we have the website. Did I total them together? No, I have them separate. Okay, and then we have the amortization. Okay, so but you can see we have the software on the line here. We have the software here, and it is a surface related, and that's where that 1880 came from. Okay, that makes sense. But we separated between retail and service, and by doing that we separate the income between service and retail as well. The expense include the cost of goods sold, and that gave us the profits, the gross profit or expense, and then I don't even know what I'm saying, but anyway, the gross receipts, the expenses, and we can see the loss that was on the tax form, but it was 1210 there. So now that we have the attachment for Schedule K, we will create attachment for schedule K1 as well. So how do you complete schedule K1 for form 1120S? So we are going to do schedule K1. Let me copy and put that down, and we are just going to open that one. And when you are filing online, if you are going to e-file, you will put online there, but if you are going to mail, you will go to the instructions. Okay, so again, brace yourself. Let's go all the way up. And you are going to mail it. So if you are going to mail it, Ogden, so we will put Ogden, but again, your business EIN, you'll put your business name. And corporation total number of share. LLC tax as an S corp does not have stocks, but now they have been asking us those questions. So what I like to do is just put 100, and because it's pretty much 100%, and for the shareholder, you'll put the shareholder partner SSN and the shareholder name, and current year allocation for that shareholder. This one we are going to put 4%, and shareholder number of share. So 4% of 100 is 4, and at the beginning of the year and at the end of the year. So pretty much because we have 5 shareholders, you will need 5 schedule K1. All schedule K1 will throw to schedule K. So we will have 4%. So we'll have 4 plus 4 plus 4, that's 3, plus 44 plus 44, and that'll be 100. So we are just going to use the percentage of ownership to put the number of shares that those people have. The loan will leave a blank, and then we'll go to line 1. So your schedule K1, your schedule K, you'll have it available and use that to complete the schedule K1. So what you are going to do for schedule K1 is you'll go to schedule K, and you'll use the total for schedule K. Line 1 is 1210. You'll time it by the ownership percentage. Here is 4%. Is 4%. So that 1210 negative times 4% will go on line 1. So everything on schedule K will go on the respective boss on schedule K1 for each partner based on their ownership percentage. So negative 1210 times 0.04 is 48. So we'll put 48. The next thing we'll put on schedule, and the code, there is no code for that one. And the next thing we'll put on it, because we do not have anything else on schedule K other than C. So we'll go to C and we'll take 4% of that as well. So C, 4% of that will be 140 times 0.04 will be 6. But C has a code section, therefore we'll go to the instruction, and again we'll come back to it. Here is where you'll mail the return. But okay, let's go to C, we'll look for C. Non-deductible expenses. So that they say to use the code C for C. So they say to use code C. Therefore, I'm going to go and use code C. And that's pretty much what I'll put on this one. And we can save it. So we'll open the, so you will do 3 of that one and just change the name on it. So we will open and we'll do 2 of the 44%, but I'm just going to do 1 of each just to show you, and the total will be 5 K-1. So I'm not going to complete the top part of this, but I'm just going to put 100 for the business, 100. And again, for this partner, you'll put the social security number, you'll put the partner's name, you'll put the partner's share of ownership, and I'm going to put the share for that partner will just be 44 related to the ownership in relative to that 100% for the business. And I'm going to leave the loan section alone. And again, line 1 of K1 1210 times 44% will be times 0.44 will be 1210 times 0.44 532. I need to check the other one to make sure I put negative number there though. Negative 532. No, it's not a positive number, it's a negative number. So negative 48 and negative 532. So line 16, we will take that 140 times 44%. 140 times 0.44, and that's CC1 or CC2, wherever that is. Already, you just make sure and we'll put code C, and you just make sure all the 5. Let's do that. So if we have, I don't know how much we have on the other one, I think that was 6. So if we have 6 plus 6 plus 6 for 3 plus 62 plus 62. Okay, so that means if we put 6 on the other side, we might need to put CC on this one because we'll have 2 CC. So let's try again. So 6 plus 6 plus 6 plus CC plus CC. Okay, so CC1. Okay, so let's try it again. 6 plus 6 plus 6 plus CC1 plus CC1, 140. Okay, and it is done, and it's done for this one. And if you want more than one activity for at-risk purpose, you can check that box as well, or you can read their instruction related to it. So because, and technically we might need to check that because we have more than one activity, and we will provide schedule K1, and you can see schedule K1. You'll attachment, you'll have this, the name, the social security, the percentage, and it's just going to be 4% of schedule K gross income and revenue and expenses based on, you know, the activity. And for the 44%, you'll have that too. So 244 34% should throw to 100%. And you just make sure, you know, all your K1 total to Schedule K. And that is how you will complete your form Schedule K1 Form 1120S. There are few sections of Form 1120S, Schedule K and Schedule K1 that I like to point out. First, let's work on line 17 of Schedule K. And if you have numbers on the page 1 of your Schedule K, of your Form 1120S, you might have to complete line 17 of Schedule K, because it is for the QBI, Qualified Business Income. So it will require you to have some detailed information regarding the business income or loss, the employee wages, and the qualified depreciable assets that qualify for that QBI. So using the software to file your tax return, once you are completing the Form 1120S and Schedule K, it will be able to complete the box 17 with the information that needs to go there. Because the box 17 has multiple things that could go there for information related to 17D, you have more than one information that will go there. Therefore, it is recommended to add it on an attachment. So you can see that on the Schedule K, it is kind of left blank here, but then we'll go to, but they say other item and amount add attachment. So when we go to Schedule K1, let's just take one here, box 17. Unless you have some other information that will go there, the information related to the QBI, it is recommended you enter the code V, that's the code V for it, and asterisk. And then in the dollar amount section, you'll put STMT to specify that it will be an attachment. And that attachment, you'll create an attachment for Schedule K and an attachment for schedule for each Schedule K1. So now let's read a little bit about that 17D, other item amount. So there are multiple things that will go there. So first you'll add an attachment for the Form 1120S, and on Schedule K1 you'll add the code, the specific code for that information, and you'll add the asterisk, and you'll add STMT in the dollar amount section. So now you can read through it to see what information that is supposed to go on line 17 that is applicable to your business. So I'm going to just go straight to code V. And you'll find that on page 43 of the page 42 of the instructions for Form 1120S. So The qualified business income QBI deduction may be taken by eligible taxpayer, and that include individual and some trust and estate. So the deduction is determined by the shareholder at the shareholder level. So the S corporations are required to report the information necessary for their shareholders to figure out the deduction. So you'll use the code V asterisk in the box 17 for each Schedule K-1 and STMT in the entry space to indicate that the information is provided on an attached statement separately, identifying the shareholder pro rata share of the following. So the qualified income item of income gain deduction and loss, W2 wages, and unadjusted basis immediately after acquisition UBIA of qualified property. Then they have some other information as well. So you'll just see which one is related to your business, and those are things you are going to add. So they say don't add all the amount in one single number, so that's why you'll need an attachment for it. So in addition, the S corporation must also report whether any of its trade or business as specified service trade or businesses STBS, and identify on the statement any trade or businesses that are aggregated. So there is a worksheet that you complete, and the software will be able to do that for you. But we can go to toward the what the specified service is. So determine the S corporation qualified trade of business. The S corporation's qualified trade or business include in its section 162 trade or business, except for SSTB or trade or the trade or business of providing service as an employee. A section 162 trade or business generally include any activity if the taxpayer primarily purpose for engaging in the activity is for the income or profit, and the S corporation is involved in the activity with continuity and regularity. So for more information, you can check that form and instructions, or you can just select section 199A and Google it to pull that section out. But we can continue and read more about the service. So specified service trade or business excluded from qualified trade or businesses. So the SSTBS are generally excluded from the definition of qualified trade or business, and SSTB is any trade or business providing services in the field of health, law, accounting, actuarial science, performing arts, consulting, financial services, and so forth, trading and all those. So, and any other trade or business where the principal asset is the reputation or skill of one or more of its employees and owners. So it's good to read that, to know the type of business you have, where that will fit, and you can just read everything to see the other things they added to it. So in the note section, they said that S corporation must separately report the QBR information for all trade or businesses engaged in by the S corporation, including the SSTB, and might also identify which trade or business are SSTB. So if you aggregate trade and business, you will select that as well. But then you can read that if you continue it. So Now, the S corporation items of QBI include qualified items of income, gain, deduction, and loss from the S corporation trade or business that are effectively connected with the conduct of a trade or business within the U.S. This may include but isn't limited to items such as ordinary business income or losses. Section 179, deductions and interest from debt and finance distribution. So, and then they pretty much, QBI may also include rental income or losses or royalty income if the activity rises to the level of a trade or business or is a qualified trade or business for purpose of Section 199A. And pretty much, you can read through that. So, and as we continue, they have the flowchart that you can ask those questions and answer it. We are not going to do that. The S corporation must first determine if it's engaged in one or more trade or businesses. It must then determine if any of its trade or business has SSTBs. It might also determine whether it has qualified PTP item from an interest in a PTP. So because the SSTB and PTP can be aggregated in any other trade or business. So if the aggregation box is checked, the SSTB and the PTP box for that specific aggregated trade or business should be checked. So the description of the statement generally match the description reported on Schedule K-1. So the amount should reflect each trade and business portion of the qualified item, income, gain, deduction, or loss reported in the applicable box of the shareholders Schedule K-1. So, for example, the amount reported on the ordinary business income loss line of the statement should reflect the attributable portion of the qualified item, income, gain, deduction, and loss for each trade or business included in the ordinary business income loss reported on in box 1 of the shareholder Schedule K-1. Each item included under other income and other deduction must state separately, identifying the nature of the and amount of each item. So W2 and UBIA of qualified property. So the S corporation must determine the W2 wage and UBIA of qualified business property allocated to QBI for each qualified trade and business. So including SSTB and report the pro rata share of each shareholder on Statement A and a substantially similar statement attached to Schedule K-1. And so this includes the pro rata share of W2 wage and UBI for qualified property reported on the S corporation from any qualified trade or business, and pretty much. So the W2 wages are amount paid to employees described in section 0551A3 and A. So if the corporation conduct more than one trade or business, it must allocate the W2 wages among its trade or businesses. And so that's that. So if we can copy this section and go check that to see what the W2 definition is. And did not allow me to copy it. But anyway, let's go there, and we pretty much copy that to paste there. And that's pretty much how you do those search. When there is something in the publication that you do not understand, or you point out to a session or a code, you can just go search it to be able to pull that out and read it. And you can just read more about it if you want to. So now that we went through that, we can see the statement. They gave an example here, and they have multiple ones. They have I believe they have A, B, C or so, and I think the software you'll use, depending on your tax report, the tax you are filing, the business tab that you have, the software might just complete the segment A for you. So in this example that we are using, if we go back to the beginning of Schedule K for the ordinary business income and loss from page 1, in this example is negative 1210. So if we go to this one again, for this attachment for Schedule K, we will have negative 1210. First, for this business, in this example, there is service and physical product mixed together. So it will be good to separate them. What is service? What is physical? Or in this example, I will just check the service, the SSTB. And then I will put negative 1210 for the ordinary business income and loss. So, and for the wages, if we go back to page 1, the wages is 200. Therefore, the wages will be 200. And the software will put the wages there, and the qualified portion of the depreciable asset will go on the UBI portion. So for this statement, QBI portion for each Schedule K1, for this 44%, the software will put V asterisk and SCMT for the dollar amount, and the attachment will have 44% of what went through this statement. AQBI for Schedule K, 44% of those for this Schedule K1. If we go to this Schedule K1, that has 4%, the line 17 will have V asterisk, and the information session will have SCMT, and the attachment that will go with it will have 4% of the Schedule K attachment of the QBI. So that will have for that 1210 negative 1210 for that 4% portion. 4% portion of it, it will be okay. So 1210, let's just do it this way, times 0.04, and that will be 48.4. that will go on that attachment related to 17V. Negative 48 for that first line, and for the 44%, that will be 1210 times 0.44, and that will be for a 532, negative 532 for the QBI portion of that Schedule K1, and the wages and the UBI qualified property portion will be distributed based on the ownership of those partners as well. And the total of all the Schedule K1s will match Schedule K information. So that is related to line 17, code V. Let's go back to 39. So the second things that I would like to point out is on page 39 of the instructions is again line 17, but line 17C, dividend distribution paid from accumulated earning and profit Schedule K only. So total dividend paid to shareholder from accumulated earning and profits, report those dividends to shareholders on Form 1099 dividend. Don't report them on Schedule K1. And it could be related to Schedule M2 as well, because Schedule M2 track accumulated earning and profits. So, and have distribution portion of it. So just keep in mind that when you are using a software to complete it, let's go back to Schedule K. Dividend distribution pay from accumulated earning and profits. So just know that if you have anything on that line, it might have to go on Form 1099, now on Schedule K1, just in case it's taxable. But that's just something to keep in mind. The third thing that I like to point out, we might find it on page 4. No, probably not on page 4, but it will be what is considered passive or not passive to the partner. So let's just pull this one. Yeah, first I should have addressed this one here. Let's go back to 40. Okay. So line 18, more than one at-risk activity. So if the corporation entered into more than one activity subject to the at-risk rule, the corporation is required to provide information separately for each at-risk activity to the shareholder. So this information is reported on an attachment to Schedule K1. You will check that box. So we can go to at-risk activities to read more about it. So if the corporation item of income, loss, or deduction reported on Schedule K1 are from more than one activity covered by the at-risk rule, the corporation must report information separately for each activity. So the following information must be provided on an attachment. So a statement that the information is a breakdown of the item of income, loss, the identity of the at-risk risk, the item of income, loss. So pretty much the attachment should state the the profit, the profit or loss from each type of activity. But again, when you are using this software to complete your task, you don't really, they will create an attachment for you and you'll just go with that. but I just want us to know more what the at-risk rule is. So if the S corporation is involved in one of the following activity as a trade or business, or for the production of income, the shareholder may be subject to the at-risk rule. And you can read it, but I put any other activity not included in 1 through 5 that is carried on as a trade or business or for the production of income So aggregation of activities, they talk about that so here as well. But and so because a trade or business is qualified as at risk activity, that's why I checked that box. But just keep that in mind. And now let's go to passive activity limitation. Here I'm not going to read that unless you have passive activity, you can read through it. But let's go up a little bit. No, in fact we need to go down, I think. So passive activity limitation. In general, section 469 limit the amount of losses, deduction, and credit that the shareholder can claim from passive activity. So the passive activity limitation does not apply to the corporation. Instead, it applies to the shareholder. So that means even for an active business, like a business engaged in a trade of business, if a partner didn't participate in that, didn't materially participate in that business, then a portion of, let's go back to page 1. You will still put the information on page 1 for the trade of the business because it's a trade or business, but the portion of that partner's schedule 1 profit or loss will still go on schedule K, line 1. Line 1, but then it's up to the partner to determine if it was a passive activity for them or not. So the passive activity limitation don't apply to the corporation. Instead, it applies to the shareholder of any income or loss and credit attributable to the passive activity. Because the treatment of each shareholder share of the corporation income or loss and credit depend on the nature of the activity that generated, the corporation might report income or loss and credit separately for each activity. So generally, passive activity include activity that involve the conduct of a trade or business if the shareholder doesn't materially participate in the activity. So passive activity include activity that involve the conduct of a trade or business if the shareholder doesn't materially participate in the activity. So depending on the software you are using, they might ask you that question when it comes to schedule K. Want to know who the data is a passive for and who it is a non-passive for. So just know that who doesn't participate in the business, it might be more than one activity for passive activity purposes. So it might be who didn't participate in the business, it might be a passive activity for that person. And who participates in it, it might be a non-passive activity for that person. So just Know that. So the passive activity rule provides that the loss or credit from passive activity can generally be applied only against income and tax respectively from passive activity. So I'm not going to continue reading that, but we got the point. And they pretty much to allow each shareholder to correctly apply the passive activity limitation, the corporation must report income or loss and credit separately from activity for each of the following: trade or business activity, rental activity, and portfolio income. So activities that are not passive activity. So trade or business activity in which the shareholder materially participates in. And then some rental property that are, they have information there to read about it as well. When what kind of rental activity might be, not a passive and so forth. So a trade or business activity is an activity other than rental activity or activity treated as incidental to an activity of holding property for investment that involve the conduct of a trade or business within the section 162. According to that, is conducted in anticipation of starting a trade or business, involves research and all those. So if the shareholder doesn't materially participate in the activity or trade or business activity of the corporation, it doesn't materially participate in the activity, a trade or business activity of the corporation is a passive activity for the shareholder. So you can read a little bit more about those, in the instruction when you are completing Schedule K-1 for the partners, based on the question that the software is asking you to know how to answer it. So each shareholder must determine if he or she materially participates in an activity. As a result, while the corporation's ordinary business income or loss is reported on page 1 of Form 1120S, and that's page 1, the specific income and deduction from each separate trade or business activity must be reported on an attachment to Form 1120S. Similarly, while each shareholder allocates a share of the corporation ordinary income and loss is reported in Box 1 of Schedule K-1, and that'll be on Box 1 of Schedule K-1. Each shareholder allocatable share of the income and deduction from each trade or business activity must be reported on statement attached to each Schedule K-1. And they have passive activity reporting as well. That you can read about. But yeah, and I just want to point out those few things from the instruction. When you are filing Form 1120S, it's good to read through the instruction and highlight things that you think might be related, applicable to your business, and have it around when you are filing your return, especially if you are using question mode side of the software, so that you can, based on the line that you are the information will go on, you can search it, read about it if it's a little bit confusing. Thank you. And the bookkeeping, the bookkeeping spreadsheet used to file the tax return in this example, you can find it under free download, and that's the expense spreadsheet. So if you do not use the tax software to record your financial data, you are looking for a workbook, we have free booking workbook for S Corporation under the free download at ninasoap.com. You can download the inventory and sales workbook that we use to complete that we used in the in this example to find the cost of goods sold and the sales. The workbook is under the free download section of our blog as well. We have 2 versions. You can see which one is best suited for your business. We have free payroll spreadsheet as well that is helpful to use to track payroll for Form 940, Form 944, and Form 941 as well. So quarterly employer tax return, annual employer tax return when it comes to payroll, and the FURA as well. The depreciation workbook that is used to calculate the depreciation in this example, you can find it at liberdownload.com. We sell it there. You can find that the depreciation worksheet for purchase at liberdownload.com. And the one that is specifically used in the example, when you go to shop, and that'll be this one, but we have few others that you can take a look at as well. The summary one is not included. Is just the one that has the depreciation of asset purchased during the year, and it is helpful when you are even using a software. Is helpful if you don't have a software you don't track your depreciable assets using a software. When you are using a tax software to file your tax return, it is good to track your asset, your depreciable assets, so that when you are using the tax software to file your return, the question that you are asked related to your asset, you can answer those questions when the amount you purchase the equipment and when you place it in service. I do not use section 179 to expense my depreciable assets. I just depreciated throughout the years. Therefore, I like to use that workbook to track those assets. But again, maybe if you are using section 179, you may not need it, but you just have to see what works for you. But if you are looking for the depreciation sheet to keep a record of your business assets, we are selling one at liberdownload.com. Thank you. We just did 2 K-1 to just show you, but for partners that we have here, we have 5 of them, 2 44% and 3 4%, and we just did one of each to show you how that will be done. And now that you have everything completed, if you want to paper mail, you have to print them out, sign. You'll attach the schedule K-1 to form 1120S. You'll attach form 4562 to form 1120S, and you'll attach form 1125A cost of goods sold as well. But you have to organize them in a certain order. So first, let's see if we can find that and what page that will be. So if you are going to file the return, you print them out, you sign, you make copy, that you'll give Schedule K-1 to the partners for them to file their 1040. You make copy for your business record as well. But then you'll read this section to see how you'll organize it. But if you use the software to print things out, it should be able to organize it already in close to it. But again, you'll have your Form 1120S, all the pages together, and then you can read through. If there is any form you completed, it will follow. So in this layout, after Form 1120S all the way to Schedule M2, we will have our cost of goods sold form that will go behind it, and then we will add the Schedule K1s, and then we will add Form 4562 depreciation and amortizations forms, the numerical form. And then they say if there is a supporting statement and attachment, arrange them in the same order as the schedule or form they support and attach them last. So, and make sure you have your business EIN and things on and business name on it. So the attachments that we created for Schedule K and K1 will go in last behind Form 4562. So you will organize those things. And now, where do you mail your Form 1120S for 2023? You'll go to instruction for Form 1120S page 4, where to file, and you locate the state your business is located in. And then you look at the column total asset at the end of the year, page 1, item F. If the line that corresponds to the row your state is located in, that's the address you will use. For Iowa, for instance, is any amount, and we use Ogden, Utah, Department of Treasury, Internal Revenue Service Center, Ogden, Utah 84201-0013. You will put that on the envelope, and you will put your document in it, and you will mail a certified mail via USPS, and it is due by March 15. Thank you very much. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C. YouTube channel and ninasoap.com, our blog. On our blog, we share different ways you can save money and different ways you can make money to reach your financial independence, where you do not depend on an employer to provide for your family. And on our blog, you can find free download section in the sidebar if you are looking for a free download that you can use to manage your business or to manage your finances. And we do have some of the documents we use in this video in the free download section as well. The bookkeeping that we use, and we have liberdownload.com, where we sell digital templates that you can use to manage your business and to manage your finances as well. Thank you. We thank you very much for watching our videos. We thank you very much for all your comments, and we thank you very much you all that subscribe to our channel. Thank you.